Okay, thank you for joining us for the Historic Property Reinvestment Program. My name is Mylisa Jesus. I'm the Marketing and Product Specialist here at the NJEDA. Before we get started, please be aware that we will have time for questions at the end of the presentation. However, you may submit questions via the Q&A function at any time, where we will write you back or address the questions live during the presentation. We do recommend that you use the Q&A function for questions instead of the chat, and it'll be easier for everyone to keep track of already answered questions. With that, it looks like we're ready to go. And so I'm going to pass things over to my colleague, Aidita Milsid, Director of Historic Preservation, to get things started. Aidita, over to you.
Thank you. Good morning, everybody. We're going to try to go through a lot of information today. So right off the bat, I will say that we will do our best to try to be as clear, provide as much information as we can in a way that everybody can grasp. That being said, we know it's a lot of data. The slides and the information will be online, and a lot of this information, it is on our website, and we will provide at the end of the presentation links to all of that. Also want to let you know, about midway through, we will have a small break. And our expectation is that we will have at least about 20 minutes at the end for questions. So please, as Miley said, please you can post your questions on the question and answer on the webinar. And if there's something that is quick and simple, we may be able to get them throughout the presentation. Otherwise, we will address the questions at the end. So with that, we're here obviously to talk about the Historic Property Reinvestment Program. And what we're going to do today is we are first going to be going through the general program information, so you have a general idea what the program is. Then we'll talk specifically about eligibility and how do you know whether a project meets the requirements for the program or not. We'll talk about the different project types and awards that you could get under the program. And then we'll go to the kind of the meat and potatoes, the heavy portion of the presentation, which will be, we'll go through the application kind of step by step and show you what it is that you're going to need, the information you're going to need to provide, as well as we're going to go, there is a competitive program, so that we have some scoreable criteria, and we'll go into detail about what it is that we're looking for and exactly what those items that the projects will be scored on. Then we'll quickly go through program fees and some information on the rounds for this year. And then finally, we go questions. So with that, first we'll, I have to apologize, our slides are a little crazy today. So, you know, the standard information being that this program was created by the New Jersey Economic Recovery Act of 2020, which was signed by the governor on January 7th of 2021. And it created a number of incentives, tax credits, financing, grant programs. It was over 15 programs that were created or modified by this. One of the programs that it created was the Historic Property Reinvestment Program, which is New Jersey's new historic tax credit program. The program is a $300 million program that is split in 6 years for $50 million caps a year. And of course, here's the webpage link, and it'll be also at the end where you can get more information on the program. So the program is set up so it can work in conjunction with the federal historic tax credit. Again, it's $300 million over 6 years with $50 million cap. The awards under the program will range between 40 and 45% of rehabilitation costs, which are the eligible costs. And applications, because it's a competitive program, will be due by a pre-established deadline, and awards will be based on competitive scoring. The program is meant to focus on historic preservation as a component of community development. Where we are right now on the program is that the rules for the program were approved by the EDA's board of directors on February of this year. They are currently have been published for public comment. The public comment period will end on June 3rd. And then we hope to have finally enacted rules sometime by either the end of June or early July. So now we'll talk a little bit about exactly how it is that the program works and what's the steps that an applicant will go through or a project goes through to the program. So first, the business entity, which is the term that is used in the statute for the applicant, will have to apply by a pre-established deadline. At that time, once we set up a window with a deadline, once the deadline and the window closes, we will start reviewing all applications. All applications will be reviewed kind of in two parallel tracks. We have a lot of the requirements, the general requirements for like financing, underwriting, etc., and some legal reviews that will be happening on one side. And then we have the scoreable items that will be reviewed by a selection committee. The selection committee is made up of a multidisciplinary team that includes will include members of both EDA, the Historic Preservation Office at DEP, and the New Jersey Historic Trust at DCA, and the evaluators range in subject expertise, anything from obviously historic preservation, including archaeology, construction, planning, and planning. So the selection committee will be reviewing all applications at one time, and they will be scored. At that point, there's a minimum scoring required to be considered for an award. So in a year that if we're not oversubscribed, then theoretically all applications that meet that minimal score and have all the other requirements will be moved forward for recommendations to our board for an award. If we are in a year where the program is oversubscribed, then based on the scoring from the selection committee, the top ranked project will be presented to the board for approval. So we'll go to the board for approval. And once approval is received, then there's a period from where approval happens to where the agreement, the rehabilitation agreement, which is in essence kind of the contract for the project and the agreement for the tax credits. And the rules call for this period to be able to go as long as 12 months. Some of this time period and a lot of this time period could be managed by the applicant. And basically at this point, what we're looking for is two main things. There's going to be some conditions on the approval. And this is a time frame by which the applicants will be putting together and sending that information to us. We expect that a lot of that information will, for example, be final financial agreements and commitments. We expect that there could be situations in which a project has financial agreements that are conditioned on if you get this money, then you get our money kind of thing. So once you have the award, that is our commitment letter to you. And then you can use that, and ultimately then we will get final financial commitments. At this point also, while we will be reviewing the scoring timeframe, we will be reviewing the project for compliance to the Secretary of the Interior standards. That's going to be more in a general sense. And at this point, we will do a full review of everything that is required. And at that point, this also allows us a little back and forth. So we don't have to deny an application because there's a small little thing that a small tweak would be able to cure or resolve the issue. So that will happen once we get finalize a review with the Secretary of the Interior standards, and which will be done in conjunction with Historic Preservation Office, and all the financial information or any requirement under the original approval is satisfied. Then we will finish and have the rehabilitation agreement signed and executed. It is at the time that the rehabilitation agreement is executed that the time frame for the project begins. So the statute established that there's two, you have to select a time frame, either 24 months or 60 months for a project that is multi-phase. That clock will start once the rehabilitation agreement is executed. That gives the applicant a little bit of control over when this timeline will start, and perhaps you can have a more advantageous start time for construction. So once the rehabilitation agreement is done, then you'll have you go through the construction period. at the end of the construction period, what we would consider in construction kind of the substantial completion, or when the building can go into service, that at that point, that's when the clock ends. And at that time, you would submit and say, we're done and we did our work. This is what the work is. And then from that point, you'll have up to, again, these two timeframes are up to this time, but some of it can be controlled by the applicant. So there's up to a year that the applicant will have to provide final cost. And at that point, what we're looking is final paid costs to show the true actual value, final cost of the project. And at that point, once you have the final cost, then the applicant will be able to apply for a certificate. So once a certificate is issued, you can also, if you were going to monetize, transfer, sell the tax credits, at this point, you could also request a tax credit transfer certificate that you can then sell. Once the project is substantially complete, at that point, then there is, I guess it's like one big compliance period of 10 years, but it's really the main compliance period is 5. So the first 5 years of this 10-year period, you will be required to submit annual reports. The rules specify specifically what information we're looking at, but among other things, we want to make sure that things that made the project eligible remain so. So any work that was done, we don't want somebody to revert work or destroy work done or anything that, for example, would jeopardize the compliance with Secretary of the Interior standards. If it was a residential project, for example, and the requirement is that there has to be at least a minimum number of 4 rental dwelling units, within the 5 years, you cannot just take a unit, a building that was 4 units, for example, and turn it into a duplex and do only 2 units. So there's some requirements within those 5 years. Once that 5 years ends, then there's still an additional 5 years where there's a 10-year prevailing wage requirement on building services. And the 10 years for prevailing wage, again, start at the same time than the 5-year compliance. So it's a total of 10 years, if that makes sense. But we will go over a little bit later on additional information on what these are. So now we will talk a little bit about what the eligibility criteria, the project type, and award. So there's some of the requirements under the program are going to be similar to other programs that the EDA has. So we're going to have economic or financial requirements, and we're going to have then additional requirements. So this is moving on its own. So the first question is, the first requirement is that there has to be the economic feasibility. The project, you have to demonstrate at the time of the application that without the tax credit, the project would not be economically feasible. There also have to show that there's a financing gap that exists, and the gap has to be equal or less. The award has to be equal or less to what the financing gap that you're showing, and you have to show that you have tried any way possible to be able to fit this gap, and there's no additional financing that exists. Then there's a requirement with regards to commencement of construction, and basically you could not have started any construction until after the execution of the rehabilitation agreement, with some very minimal exceptions. And when we talk about the application, we'll go into those, but the short end of that is that unless it's something that is a health and safety issue that has to be addressed immediately, there could be no start of construction. And this is in keeping with the federal program. You also have to have a project equity of at least 20% of what the total cost of rehabilitation. And when we say total cost, that means the entire project, eligible and non-eligible costs. And the exception on this is that if the project is in a government restricted municipality, which in New Jersey, there's 3 of those. They're Trenton, Patterson, and Atlantic City. If you're in one of those 3 municipalities, then the equity can be 10%, as little as 10%. The cost of the rehabilitation, there's also a requirement on that, and that is, this one is equal and in keeping with what the federal program does, which basically, sort of in English, it means that you have to spend more money than what the value of the property before the project started, or $5,000, whichever is greater. As I mentioned earlier, there's also some requirements with regards to for projects that are residential projects, and that include that the building, obviously, the project has to be income producing, so it has to be rental purpose, and it has to have at least 4 dwelling units. And then if the project consists of newly constructed residential units, then at least 20% of the units that have been created must be set aside for lower and moderate income households. And then finally, the project needs to fit the definition of rehabilitation project. And that the rules define a rehabilitation project as a specific construction project or improvement or phase of a project or improvement undertaken by a business entity that includes the rehabilitation of a qualified property or a transformative property. So now the question is, what's a qualified property or a transformative property? Those are the 2 different types of property that fit within the program. And they have different requirements. With the qualified property being the simpler one, and a transformative property having not just the qualified property is going to have requirements with regards to previous identification, designations with regards to the historic nature of the building. Transformative property would have other requirements with regards to location and some financial requirements. So projects that have a qualified property are what we will call a regular project. So a qualified property basically means that it's a property, obviously has to be in New Jersey. And once the project is done, the property must be income producing. And it has to have been previously identified. This is another thing that our program differs from the federal, because the identification has to happen prior to applying, while the federal allows you to a certain degree to move towards listing in the National Register. In this case, the designation have to have happened already. And you can, to be able to fit to qualify for the program, you have to have been identified either by being listed in the National Register, listed in the New Jersey Register, being designated as historic by the Pinelands Commission, or it has to have been identified or registered by a certified local government. The statute uses some language about, a municipality that has criteria for identification that has approved by the officer. And ultimately what that means is a certified local government, which I believe on New Jersey right now, there's 47, if I believe correctly, but we have information both on our website and in the Historic Preservation Office. You can look at in their website, what the list of those certified local governments are. And regardless of what designation that you have, the designation could be, a property could be either individually identified, or it could be as part of a historic district. However, if it's part of a historic district, it must be contributing to the district. So then we have a transformative property. Again, the bar is significantly higher. It also has to be in the state of New Jersey, obviously, also has to be income producing at the end of this. However, it cannot be a residential property. So it cannot, under transformative residential projects, do not qualify. And for a property to be considered a transformative property, the applicant needs to show and prove to the EDA that when the project is done, that it will generate substantial increase in state revenues through the creation of increased business activity within the surrounding areas. So that is kind of a financial requirement, which shows what the benefit of the project will be. With regards to historic designation, the requirements on their transformative property is that the property must be individually, not as part of a district. It has to be individually listed in the New Jersey Register of Historic Places. and it must have received a determination of eligibility from the keeper of the National Register. The designation, this determination of eligibility from the keeper must have been received prior to the enactment of the Act. So it has to have been received prior to January 7th of 2021. Then in addition to that, there is requirement with regards to location. So the property has to be located within a 1/2 mile radius of the center point of a transit village designated by NJDOT, and within a city of a first class. And there's currently in New Jersey, there's 3 cities of the first class, and they are Newark, Jersey City, and Paterson. Or it can be located within a government restricted municipality. And again, the government restricted municipalities are Trenton, Paterson, and Atlantic City. So as you can see, the transformative property requirements are significantly higher, and that is because the credits that you can receive as a transformative project are also significantly higher. And I would advise anybody who is considering a project on their transformative property to check and double check that you have all of these things. The fees are going to be substantially higher for a transformative property or a transformative project. And there is absolutely no wiggle room to what the definition of a transformative property and by default a transformative project is. There's very few properties in New Jersey that would fit this definition. Then with regards to the rehabilitation period, as I mentioned before, the period has to be selected at the time of application. And you can select one of two, whether you can do a 24-month period. That is for projects that will be completed in a single phase. Or if you have a project that will be completed in multiple phases, then you have up to 60 months period for construction. In a case of a project that is done in multiple phases, the phases have to be set and identified as part of architectural plans and specifications. It cannot be just kind of a random thing that you put in the actual drawings. It has to show that the project will be done in phases, and there has to be a way by which you can certify completion of phases. Because projects that are done in multiple phases also will have the ability to do to get certificates after the completion of each phase. So what is the tax credit award size? So it will depend on location and the type of project. For a regular project, the award size would be up to 40% of the eligible costs, up to a maximum of $4 million. However, if you have a regular project with a qualified property that is located either within a qualified incentive tract or government restricted municipality, then that percentage goes up to 45%, and the maximum cap goes up to $8 million. And the $4 million and the $8 million cap, I want to clarify here, is the size of the award. So a regular project outside of an qualified incentive tract or a government restricted municipality, you can get up to a $4 million credit maximum. If you are in a qualified incentive tract or a GRM, then you can get up to $8 million. And then you have the transformative projects, and for those projects, again, are very limited, but those could get up to 45% of the rehabilitation costs or the eligible costs, up to a maximum of $50 million. And again, the award size will be based on the cost of rehabilitation, which are the eligible costs. So then we have a couple of additional things we want to go through here with regards to what are the additional information on the program. So number one, an important thing to note is that the program allows for a co-applicant. A co-applicant will always be a non-for-profit 501c3. It cannot be any random 501c3. It has to be a non-for-profit organization that is contributing something to the project. And it could be maybe they're the owners of the property, or they may be contributing some services or money or whatever it may be. And then finally, that a co-applicant also has to have entered into a participation agreement with the developer or the business entity that specifies what their participation in the project is going to be and what their role will be both during the project and, if any, and then after. And for example, this could be somebody who non-for-profit that owns the property, or it could be that you have an agreement that once the project is completed, the non-for-profit is going to be helping manage the property, or they're going to have space in the property, run their organization from the property, etc. The big benefit of having a co-applicant in an instant where there is a non-for-profit involved in the project is that when the credits are issued, if there's a co-applicant, the credits are issued through the co-applicant, which allows you, if you are selling or transferring the credits, obviously the tax benefits of it going through a non-for-profit versus a for-profit entity. Then we also have some additional requirements on the program with regards to prevailing wage and affirmative action. For prevailing wage, all costs during construction have to be all costs or is prevailing wage for the entirety of the construction. And then for building services, like I mentioned earlier, for 10 years following the completion. That being said, there is a caveat here, which is that for projects that are multi-phase projects, if you have, once you complete the first phase, that's when the 10-year clock starts. So if you have a 60 months or 5-year project, and you get your first, you complete your first phase and get your first certificate at the 1-year mark, that's when the 10 years starts. So technically then you will only, so it's 4 more years of construction. So it's only the 10 years will extend only 6 years past to when the building goes into service. Then we also have affirmative action requirements, and this is in keeping with the affirmative action rules for the state. And all this applies to all construction activity, and it applies up until either the completion of the project or 2 years after the first tax credit is issued. Oop. And this again is playing tricks on me. And then finally, obviously, you're able to monetize, transfer the credits. The program allows for the business entity or the applicant, or I guess the co-applicant, to sell or assign the tax credit in part or in full. And it could be done though one time and one time only. So once the entity that receives the credit, which is going to be either the applicant or the co-applicant, sells it to somebody else, that other person would not be able to sell the credit any further. The price of the credit cannot be less than 85% of the value, so 85 cents on the dollar, with the exception of if the project is a residential project with newly constructed units that has received federal low-income housing tax credits. In those cases, then the credits could be sold up to reduced no less than 75% of the value of the credit. And then again, the purchaser of the credit will not be able to transfer the credits further. Alrighty, so then finally here, we have some, I just want to point out before we go in here in detail into the application, we want to let you know that on the website here, this is the link to the page that has the information on this program. There's a lot of information that we strongly recommend that everybody goes and takes a look at. We have a sample application, which full disclosure is that the sample application that is there is for the current round, which is a transformative round. While the information that we're going to be asking is going to be the same, and for the most part is going to be in the format that it is now. There might be some minor changes. For the most part, in areas where we are considering some minor changes, we will try to point them out in the presentation today. But they're going to be, we're talking about very, very minor things. We're talking something like, right now you have to type in a description somewhere. We may ask you to attach a description in a form before later. So it's going to be exactly the same information. But we have a sample application. We also have an application checklist that we strongly recommend that you look at. And that application checklist will have every single item that you will need. We strongly recommend any person who's looking to apply to the program pulls it down and downloads the checklist and collects all the information before you start filling out. Filling out the application is pretty time consuming. There's a lot of information, and there's a lot of things that, because they're required fields, you will not be able to move forward until you either answer the question, provide the information, upload the information, whatever the requirement is. So we'd strongly recommend that you download the checklist and collect everything before you sit down to do it. We also have some frequently asked questions document, and application. We have all the required forms for the application can be downloaded and viewed from the webpage. We also have a mapping assistance tool that just all the areas that are tied into locations, such as like whether you're in a government restricted municipality, qualified incentive tract, cities of the first class, all of those things will show up in the mapping tool. So you can go find your site and type the address and be able to see if any of these things apply to your program. And you will have to do that actually as part of the application. You will have to download a map from the mapping tool. Then we have program rules, information on the scoring criteria, and the return on investment, as well as in any given application window, any questions that are answered will be replied to here. Okay, I'm being told that there's some questions I should look at. So let me look at this really quickly. First question, can you provide example of the type of projects that are eligible? The percentage said income properties that are not residential. Alrighty, so the ones that are not residential are for transformative projects only. And for regular projects, they could be residential. So you can have, for example, the generic old factory building that is empty, that is being turned into apartments. That fits the definition. And we're using the term income producing very loosely. So anything in where there is, if you have a building where you're going to be selling something, you're going to be charging a fee to get in. If it's residential where you're going to be renting units, all of that will count as residential. So then we also have, if there's only one co-applicant allowed, you know what, that's stumping me right now. I can't remember if we looked at that, but if you have a specific example that you have a question about, please reach out to us. We will look at that and let you know. I think right now we were looking at one co-applicant, but I think the question would be who the credits go to, but that's something that we can definitely look into. Alrighty, so those are two questions we had, and I think with that we're gonna go in. And now this thing doesn't want to move forward for some reason, because it's being difficult today. So with that, I am going to pass it on to Michael, and to go into more detail on the application. So Michael, take it away.
All right, thank you, Idita. Good morning, everybody. My name is Michael Wiersbicki. I am obviously with the EDA. I'm a senior senior project officer in historic preservation, and we are going to go into the application. So let's see if this works for me. We are having technical difficulties with this slideshow this morning. So Idita, it doesn't look like it's
okay
working for me, so I'm going to have to ask you to help me out.
It's a little stuck on me here. Okay, well, I don't know why. There we go. Right?
Okay.
Did I go too far? No.
Nope, that was it. Thank you. So starting off, the application, generally speaking, how it's going to be evaluated is we will allocate tax credits based on the evaluation of the proposed projects, first the transformative projects, and then other rehabilitation projects according to the following factors: historic significance, existing or potential threat, the project concept and team, the site control, and also the positive impact on the surrounding neighborhood. There is a minimum score required, and the transformative, like I said above, will be prioritized first. Now, two important things to know. For the 2022 current year that we're in, there will be two windows, one for transformative and one for the other rehabilitation projects. Going forward, that will likely change, and there will only be one window. Also, with those scoring criteria factors listed here, IDITA will go into greater detail later on in this presentation regarding those. Next.
Let me see. There you go.
All right. So a few things you should know before you start. The application requires a lot of detailed information and supporting documentation about your company, the affiliates, and the proposed project for which you're applying for the tax credits. The way that the application is laid out, there are 21 sections in total, 21 pages or sections, and you can't proceed to the next page or section without completing all required fields and uploads within the current section that you're working for. So if you're on page 5, you can't get to page 6 until page 5 is complete. The progress on the application can be saved as you complete each session. So with that, you can save wherever you leave off. You can hit save and it will ask for your email, and we will send you a link to the application where you left off. The full application is lengthy and it will take several hours to complete. You should also be advised that, and I think IDITA had mentioned this already, that application fee is non-refundable. And lastly, the applicant will be given a flag or warning if a required item is not provided. So if you forget to attach something or you leave something blank, you'll see there's an example on the screen there that says a requirement of the Historic Property Reinvestment Program is such and such. Next.
Oh my, there we go.
Thanks. So 2 recommendations for the application. It is highly recommended that you download a copy of the example application and the application checklist that are on our website prior to starting, and also collect all written responses and required documents prior to filling them in on the online form. And as IDITA had mentioned before, these are on the EDA website, and we strongly recommend that you review those 2 documents. It is also highly recommended that when you upload a file, that the naming conventions facilitate rapid completeness review. So we want the upload file names to be identifiably connected to the project. They should accurately describe the file contents or the application element, and they should also denote the date they were last modified or a file version number. Next. All right, so here we are now starting in the application. As I mentioned, there were many pages, so these will be numbered accordingly. So we're in section 1, which is the welcome section. The start of the application provides a lot of definitions for terms used throughout the application process, and that is intended to provide the clarity and assist the applicant during the application process. Also, the applicant must acknowledge the program and application statements below. So the first one is regarding the program in itself, is that it's a competitive program and all applications submitted will be evaluated based on pre-established evaluation criteria, which will be used to allocate tax credits in circumstances where the request for tax credits exceed the annual maximum cap established by the statute. The applicant is strongly encouraged to carefully review entirety of the application and all attachments prior to submission, as no changes or additions will be permitted once application is submitted. The second acknowledgement deals with the transformative projects and stating that you understand that you are submitting your application as a transformative project and that the fee is non-refundable. This will likely change. Again, like I had mentioned before, our next regular round, this will probably be removed from that, and going forward, perhaps next year, this will be laid out a little bit differently because we will most likely only have one round for applications. Next. Thanks. So starting off, section 2 is pretty basic contact information. So we're going to be asking for the primary point of contact, which is the applicant company, the authorized representative, if it's different, or someone other than the applicant company, and the CEO or equivalent if applicable. And I also just want to make a quick note that you'll notice on the slides, there's fill in the blank, check mark, you'll see in other parts, upload. That's just the directive of what type of information, how the information is provided to us. And you can see examples of the pages on the right of the screen. Next. Okay, so continuing on, applicants may choose to utilize a consultant or consultants for support on the application. So if that is the case, this would be the area to enter that information, and that could be consultants, legal counsel, accountant, or media contact. Just important to know is that the NJEDA will direct all communications to the primary point of contact that you list on the application. Next. And moving on into section 3, here is where we will have the primary applicant information on affiliates. Excuse me. Apologize. The applicant organizational information is located here. So information on affiliates, parent companies, holding companies, and other related entities, that will be collected in other sections of the application. So here we will be asking for the legal organizational information. That's your contact information, the entity type, date, and place of incorporation, the New Jersey tax ID numbers, and NAICS codes. Any formation documents will need to be uploaded here. Your New Jersey tax certificate from the New Jersey Division of Taxation, and there is a link and directions on the application on how to ascertain that certificate. We also ask if there has been any past NJEDA assistance, and we will need a description of that past assistance. And that should include details of the programs, projects, timeframes, status, etc. And also we'll ask for the religious activities form to be uploaded, and that details involvement of religious activities. And that is also linked on this application. Next. Here, we're still within section 3 on the applicant organizational information, and we are talking about permits and approvals. So we need to know if the applicant has any permits and approvals or obligations and responsibilities with which the business entity is associated with or has interest in. So if applicable, you would need to list any and all New Jersey Department of Labor and Workforce Development, Department of Environmental Protection, and the Department of Treasury permits and approvals or obligations and responsibilities. And you'll see there that we have a table which you'll need to provide the name of permit, the department issuing the permit, the type of permit, and the status. And this is all just to make sure that you're in good standing with the DEP, Department of Treasury, and Labor and Workforce Development. Next, please. Section 4 for a co-applicant. Now, IDETA had already mentioned that the co-applicant must be a 501c3 non-for-profit. So if applicable, this is where you would enter their information. So you would have the co-applicant contact information. The important part of the co-applicant is that they will be providing real services and contributing capital and real property to the project. And this is where you would confirm that. You will also have to let us know their role in the project. and what is the long-term participation agreement between the co-applicant and the business entity. In that participation agreement, it needs to specify the co-applicant's participation in the rehabilitation project. And lastly, the co-applicants need to receive the tax credits needs to be entered here. Next, please. Continue on with the co-applicant. We'll also need the following information. This is a little bit repetitive from the applicant information. It's similar, but obviously for the co-applicant. So the organizational details, such as the entity type, date and location of formation, the tax ID number, address, etc. The New Jersey Tax Clearance Certificate, which is from the Division of Taxation, and there'll be a link for that form. We'll need a high-level 2 to 3 short paragraph description of the co-applicant's organization. And again, similar to the applicant section, any past NJEDA assistance and the involvement of religious activities form. Both of those items will be entered here. Next, please.
Sorry.
You're fine. Yes, again, this is another area that is a bit repetitive from the applicant section, but again, for the co-applicant and specific to them, it's about permits and approvals or obligations and responsibilities with which the business entity is associated with or has interest in. You would list all Department of Labor and Workforce Development, Department of Environmental Protection, and Department of Treasury permits and approvals or obligations and responsibilities with the co-applicant is associated with or has interest in. And similar to the one of the previous slides that we went through, name of permit, department issuing the permit, type of permit, and status would be entered over here. Next, please. And lastly, for the co-applicant area, we would need to know the development subsidies receiving or requested by the co-applicant, if applicable. And that's specific to the rehabilitation project. So examples can include, but are not limited to, state, federal, or local grants, foundation grants, pilot agreements, which are payment in lieu of taxes, and similar things. And you'll see here we have a table format to fill in the blank. We would need to know the name of the granting body, whether the subsidy is anticipated or committed, the date, and the amount of the development subsidy. There's also a co-applicant's legal questionnaire, which is a form that is on our website, amongst other forms that are required on this application. That would be uploaded here. And lastly, we need an organizational chart or other materials that provide a summary description of the type of organization and its ownership structure. Next, please. Okay, going into section 5, which is ownership. Ownership, the applicant will have to provide ownership information here. And 2 areas of this section of the application. The first, is the applicant or any person who controls the applicant or owns or controls more than 1% of the stock of the applicant, an officer or employee of any agency, authority, or other instrumentality of the state of New Jersey? Secondly, is there any individual or entity with a 10% or greater ownership of the company? So within that second area, we will need, the owner will need to provide 3 consecutive years of personal tax returns, if that is the case. And then also the personal financial statements, which you can see to the right of your screen. So on those financial statements, which is linked on the document, it's applicant and co-applicant information, annual income and expenditures, assets, liabilities, securities, notes payables, and partnerships. That's the kind of information that form is looking for. Next, please. So now that we're done with that, we're now getting into the project information area. So section 6, where we're looking at project information, and we will be starting off with the project name and historic property name. Those two can obviously be different. If something is, has the historic name, which all the historic documents have the property listed as or named as, the new development or rehabilitation might be named something different. So we need both of those. A 1 to 2 paragraph description of the project scale and scope, the projected number of project employees at completion, the project address, and the rehabilitation period and phases, which Idita had mentioned earlier, being either 24 or 60 month. And just as a little note, the project address and the project name and historic property names, that information you enter here will be carried over into other sections of the application, specifically the scoring criteria section. Next, please.
Oh, did I go too far?
No, one, there we go. So then on the project information, we're looking at location information. We will need the census tract, block, and lot numbers. That is provided on the application. Again, there's a link for that to get that information. We will also need a copy of the NJEDA mapping tool report, which you can see on the right-hand side. So that will show if there's a transit village in a city of the first class, government restricted municipality, certified local governments, qualified incentive tracts. It's all mapped out, color-coded. It's very easy to use, I think, but I've also been using it for a while, so maybe I'm prejudiced. We'll also ask for a report printed off of that. And now you would just enter your property address information and that report would come up. The one thing we do need you to do is on the report, you need to enter your project address and historic and project names. And you can see there on the bottom right, there's an example of the report with the property names. This tool also helps in determining the project location in any of the areas of designation. So if it's in a qualified incentive tract, a government restricted municipality, a city of the first class, or within a half mile of the center point of a New Jersey, of a NJDOT transit village, this is where you can really focus in and find that information if you didn't already know that information. Next, please. Okay, closing out this section of general project information, we will ask about whether your project is a transformative project. So Idita already touched on the differences between a regular eligible project and a transformative project. So here we want to know, does the project, does the applicant want to apply as a transformative project? And does the project meet the definition of a transformative project? Will the project generate substantial increases in state revenues through increased business activity within the surrounding area? And if you check yes on that, you'll have to provide a study or report that shows the project will generate substantial increases in state revenues through increased business activity within the surrounding area. Also, has the property been individually listed on the New Jersey Register of Historic Places? And lastly, has the property received a DOE or determination of eligibility from the keeper of the National Register of Historic Places prior to January 7th, 2021, when the ERA was enacted? Also, just keep in mind, as I stated before, we're having a separate transformative application window and a regular application window this year. So this slide or this section of the application will likely be modified in years going forward. Next, please. And I think everyone's favorite part of the of this presentation is we're going to take a 10-minute break. So we are about 10:30 now. How about we all meet back at 10:40, if that works for everybody?
That sounds good. Thanks, Michael. So we will take a 10-minute break, and then from there, we are going to go into the next section. We're going to start talking about the project scoring criteria. So we'll see everybody in 10 minutes. Alrighty, welcome back. It is 10:40, so we are going to keep going because we still have a lot of information to go. It seems like we're on time. We want to try to keep it that way so we also have time later on for any questions. So with that, we're going to now move forward and to start talking a little bit about the scoring criteria, part of the application. Let's see if this is continuing to be difficult. Alrighty, so as we mentioned, there is it's a competitive program. So we will be scoring this scoring criteria, and all the applications will be reviewed and scored by a selection committee. Out of a maximum of 100 points, a total scores that a application can get, you have to get a minimum of 50 to be considered for an award. Again, in a year where we're not oversubscribed, if your project has a score of at least 50 and you have met all the other requirements, you will be eligible and you would probably be recommended for an award. On years that we're oversubscribed, meaning that we have application asking for more money than what we have to give, which is 50 million usually, then in those cases, then we will go by the scores at all the projects. So all the projects will be ranked based on their scores that they will get based on the scoring criteria. So the scoring criteria there's 5 different factors that we'll be looking at. And I'll be going into a little more detail of all of them moving forward and including the information that we'll be asking. But in general, what we'll be asking for is historic significance of the resource, if there's an imminent threat to the resource, what's the project, information on the project concept and the team, and basically team experience and the like, site control, and whether the project would have a positive impact on the surrounding neighborhood. So first, we're going to talk about historic significance. Out of the 5 factors that we're going to be looking at and that are scored, the historic significance of the resource is the highest factor, is the one that has the most points to give. Again, on our website, there is a document on scoring criteria that has information on each one of these, as well as what the points are for each question or each thing to be considered. So we are going to be asking for information with regards to the significance of the resource. The first thing we'll ask is specifically straight out what the significance of the property. This is an upload section, so you're going to take a file and upload it. As of right now, it's just any narrative that you write. We may move forward as we until either the next round or subsequent rounds, and we may create a form for this, a standardized form, but right now is it's an upload of the significance. If you have a property that is listed in the New Jersey National Register, or you have information that already exists, you could upload that. Right now, this section will be what we will be guided by is the criteria for evaluation used under both the New Jersey National Register on the 36 Code of Federal Regulations 60.4, which is the criteria A, B, C, and D that everybody knows. So that is what we will be looking at here. And this, I believe, maybe, if not, is definitely one of the highest scoring items. Then we will be looking at historic fabric and integrity. Again, this will also be an upload, and we're asking for a narrative that explains what is the historic fabric that is on the building, and whether the building retains the ability to convey historic significance. Again, we are being guided by the federal information on the federal program, and we will be looking at how much integrity is left on the building. We are also maybe looking if it's a resource that has been identified many years ago, was all the fabric left before and now everything has been stripped out. So we'll be looking at that and what remains. What are the historic features, finishes, materials, and everything that remain in place. We will then be looking at what's the historic designation. So under the program, we talked earlier about how it has to have been previously identified, whether it is in the national, state, or state register, if it's the Pinelands identified by Pinelands Commission, or if it was identified by CLG or certified local government. So there'll be a click, for you to pick which one you have. If the property is listed in the National or New Jersey Register, you'll just click on that. And when you click on them, every one you click, a field will appear asking you to fill in what's the date for the registration. So we ask when you put in those dates. If the designations are by Pinelands or CLG, you will get a window for required upload. Over there, we will be asking for you to provide some proof or information showing that your resource has been identified by Pinelands or CLG. We actually had an information session with Pinelands and CLG earlier this week, and to let them know what we'll be looking at, and we will be also putting together some standard language that Pinelands or CLG may be able to use if they want to produce a letter to let you know when a property has been identified by them. So we'll be looking for that type of documentation to be uploaded. Scoring on this section will be based on your, it's not, you don't get points for each one of these that you're in. The scoring is going to be based on the highest designation that you have. So with National Register being the highest, New Jersey, then Pinelands, Certified Local Government, in that order. Then obviously we will be asking if the property is a National Historic Landmark, and if it has that designation, again, there'll be a check mark indicating that designation. And again, you will get a pop-up that will, or additional field that will come in asking you for what's the date of that designation. You'll fill in the blank for that. We were also, we're asking that for the designation status on the property, we'll letting you know, obviously, for the anything in the National or New Jersey Register, we're only asking for the date, and that's something that we can easily look at and confirm. The other ones are a little trickier, but both on, I believe in the application itself, we also give you this information, which is where you can confirm. So if you're looking to see for registration in the National or New Jersey Register, you can look at the Historic Preservation Office Culture Resource Geographic Information System, which is called LUCI, which can be accessed at their website. And it's a mapping tool very similar to our mapping tool, where you can type in address or name of the resource and should be able to find it, or just search through a map. Then information on the Pinelands, we ask that you reach out to the Pinelands Commission specifically, and this is their website. And for a certified local government, you can either go to the Historic Preservation Office, but also you can go to the National Park Service Certified Local Governments page. And from there, there's a link where you can search to see if your local municipality is a certified local government or not. Okay, so the next section we will be looking at is the imminent threat of the historic resource. The reason we included this as part of the application is because we felt that it was important that in a situation where we have two applications that are kind of the same in any other way and pretty similar in scoring about the same, that there was a value to be able to identify a resource that without this money is likely to be gone, where this could be the last lifeboat, lifeline, whatever you may call, it's the last thing that could save it, because it's likely that it'll be lost. So with that, we're going to be looking at a couple of things that we will be to be able to assess that. So first, we'll be looking is the first item we'll be looking at is building envelope. So what we're talking about here is the building open to the elements in any way? Is it missing doors and windows? Is there a leak on the roof? Is there any way that water or the elements are getting in? Because as we know, that is a huge problem for a historic building. We are asking, obviously, like with many other things, there's a question with a check mark. Is there's a danger to the property due to building envelopes issue? If you mark yes, then we will ask for you to type information and give us information on what is the danger, and you let us know. There's a window there's windows missing, there's doors, there's leaks on the roof, or whatever it may be, and then we ask that you upload photos showing the current condition so we can see what the situation is. Then the next item that we're looking at is structural components. And again, all of these, I have to clarify that all these imminent threat are all if applicable. We understand that there's buildings that may be in good shape that none of this will apply to. So these will all be is if applicable. So if, again, there'll be a question about whether there's a significant damage to structural components. And if so, you mark yes. And then there will be a section that appears for fill in the blank, fillable section, where we ask that you describe what those are. Here we are talking about big items that could ultimately cause the collapse of the building. So we're talking about foundation, roof rafters, load-bearing walls, columns, beams, anything like that. We are asking for you to provide a description what the issue is. And then depending on what the damage is, we are asking for you to provide information to verify it. So if we are talking about a situation where you have, for example, a building the roof has partially collapsed, obviously that is clear that there's an issue, structural issue there, and photos will be sufficient. Or if you have a foundation that has partially collapsed or something that is very noticeable. Otherwise, we ask that a report from a structural engineer is submitted. And by the way, even if it is very noticeable and obvious, if you have a structural report from an structural engineer, please, you can upload it and provide it. So we don't want to deter. If you have somebody that has already looked at a building and has told you there's cracks in the foundation that is in bad shape, or there's issues with the roof or whatever it may be, that they're considering that it's a significant issue that could cause the loss of the property or of the resource of the building, we want to know that information. So we're asking that you provide a report, and then obviously that you attach current photos showing the current condition. And then finally, we are asking for something that, two other things, one that is, I guess, also obvious, another one is a little more gray area, but we're asking about vacancy in the property. Again, we know that it's a bad thing for an old building to sit, or for any building for that matter, to be sitting vacant. When we're talking about vacancy, we're talking about continuously vacant. For at least a year, and we're talking continuously vacant without utilities, not a building that, HVAC is still running and the windows and everything are in place and it's fine. We're talking about a building that has been continued vacant without any utilities for at least a year. The scoring here will have to depend on what's the length of the vacancy. So, and you can tell us how long it's been, 1 to 2 years, 2 to 3 years, and so on, and then up to 5 or more. Then we are asking for the final aspect that we're asking with regards to the imminent threat is the one that is a little grayer, and is regarding whether there's a threat to encroachment. We're asking for this if you believe that there's an imminent threat due to encroachment, to we just check the mark and say that you believe there is, and provide us a brief narrative explaining what it is. This, we're looking at something like everything around it has been developed. All the other buildings around in the neighborhood had been knocked down. There's new buildings coming up. There's a developer that is looking to develop this and knock it down, whatever it may be. You can also, there's an upload field that you can upload additional information. You have, maps, photos, press articles, correspondence, whatever it may be, to show that you believe that there's an imminent threat. And again, this one is the one factor that is a little more, a little less black and white, I'm going to say. But we all know that it exists, and it's an issue that we felt was important to include. All right, so then the next section that we'll look at is project concept and team. This is the second highest scoreable section for the application, because again, this is where we're going to hear and we want to know what is the concept for the project, what is the project entails, how has the team thought about it, and the experience, etc., on the team. So we're going to be asking for a lot of information here, because the idea is that this project should be pretty close to be ready to go. And we want to know exactly what the project entails. So we are going to be asking for construction documents, so both construction drawings and specifications to be uploaded. We ask that construction drawings are uploaded on a PDF format, but up to scale. And obviously a full set of specifications. We will ask for information regarding permits and approvals. And this is going to be a fill in the blank, similar to another section that Michael showed up. He showed a section before about permitting with like other agencies like DEP, etc. In this case, we're talking about require permits for the construction. So for example, and we don't expect that you have a permit for construction, but we're hoping that you will have release drawings from the local building code official, that if you had to go to, for example, for a zoning board for variance or anything like that, there's a historic preservation commission that you needed approval from, that all of that has been done. So we asking you what it is and what's the status of it. We're also asking for some other information that we're going to be looking at with regards to readiness of the project, and we're going to be able to look at again how thoughtful the project was put together, and this will include what the anticipated construction schedule. So we will ask for a bar schedule to be uploaded, and we're also asking for a construction cost estimate. And this will be a fill in the blanks. Tell us what it is, although we will also ask for actual CCE to be uploaded. We will be asking for, and we have a bunch of forms that I'll go through at the end, but we will ask for information on the total cost of the project, what is the eligible cost, what are the soft costs, etc. And we have a form that will break that up. But so these are just the general information that we'll be asking for now, but let's talk a little bit about the things that in how we're going to be specific items and how we're going to be scoring them. So we have the first item that we would look at is we are asking for, again, this is still requirements. So we have requirements for the architect, whether you have a historic architect or architectural historian. This is a requirement. You have to have one of the other for the project. So it's going to be a check mark. Do you have it or not? And then we ask for the contact information to be filled in. We will also be asking for the resume of that historic preservation, or historic architect or architectural historian to be included among other information. But then we have the other section that is a very large section and has one of the I think it's the second highest scores within the application. And I want to focus, it's kind of thrown in the middle of all of this, but I want to focus a bit on, because there's a lot that we're asking for, which is the narrative, which is with the proposed project approach. So in this section, it is a narrative that we're asking for an upload, but we're asking for a lot of things to be covered. And what we are looking for here is we want to get an understanding of exactly what it is that the project entails. What is it that you're looking to do with the project? We're asking for you to identify any constraints or issues or concerns and how you would look to address them. How you're going to be addressing and make sure that you have full address the compliance with the Secretary of the Interior standards and what's the approach to that. We also ask that if a project has, there's any kind of ground disturbance on the project, and there's going to be a check mark that will ask that later, but you have to first address it here. So if there's any kind of ground disturbance, and we're not talking about just digging 10 feet to put foundations in on a new addition, we're talking about any ground disturbance with, if you're doing any grading, if you're, because you're putting a parking lot or something like that. So you have any ground disturbance, we want to know what is the approach with regards to any potential archaeology. If you are in a site where there's already high possibility of archaeology, or there has been an archaeological site identified on the site, and the project will have any ground disturbance, we ask that you address it here. If you do not have, even if you're not in a site that has been identified by a high probability of significant archaeological site, or there's no identified archaeology on the site or anything like that, but your project will have ground disturbance, we are still asking that you look at this and will provide us information about, have you thought about, since you're having ground disturbance, do you have a plan in place of what would happen? if any significant archaeology is discovered during the construction. How would you address it? Again, this section is the section that is going to tell us, we believe the team understands what the project is, understands the concerns with regards to the resource, even the identified resource, as well as any other potential archaeological resources that may be disturbed. And they understand the Secretary of the Interior standards and how they compliance with the standards will be addressed as part of the project. So there is a lot to cover there. So we ask that you be very thoughtful in this section, because this is, again, one of the highest scored areas, and we'll be looking for all of that in that section. Then we'll also be asking for a narrative description that will explain the experience and qualifications of the team. So if we have a form that will ask for one of the key team members. So we ask that you address that, and whether the team members have worked on historic properties before. And we're looking, it doesn't have to be that if this is a old factory building, they have worked in the rehab of another factory building. We're looking at projects of similar size and complexity, and make sure that somebody has the team has experience dealing with historic resources, and know how to deal with the Secretary of the Interior standards, and how to deal with all the complexities and sometimes unknowns of dealing with the rehabilitation of an old building. So we're asking for that to be put into kind of a fill in the blank narrative. Then we're also asking for you to upload an organizational chart of the team that shows, if you have different consultants and all that, what is the structure for the team and how will that work. Then when we're talking about then this more specific, how are you going to be addressing the rehabilitation? How are you dealing with the Secretary of the Interior standards? There is two ways to go about it. So if your project has not applied for the federal historic tax credit program, and for the purpose of this, when we say have not applied, to be considered as you have applied, you have to have applied and received approval of the Part 2 under the federal by the time of the application. So if you don't have that, if you don't have an approved Part 2, and our approval for us is based sign off from SHPO, from the Historic Preservation Office. So if you don't have that, then we ask that you fill out this form. The form is HPSC 3-5. Believe it or not, that means something, but it's a detailed description of the rehabilitation work. This form, it is on our website. You can download it right now. And on this, we will be looking for any specific features and details and how each of them are going to be addressed. There's also requirements for photographs to be uploaded with this. Then, however, if you do have already an approved Part 2 under the federal program, then instead of filling out that form, and again, there's going to be a check mark that is going to ask you, do you have this, or you have the federal Part 2 approved or not? So if you say that you do have it, then instead of providing that new form, then you have to show us whether it's a letter or whatever it may be from SHPO saying that yes, they reviewed and they have approved and sent off for federal. And then we ask that you, instead of the new form, that you upload a copy of your form. So you can do which is the Part 2. So you don't have to take the same information. And by the way, our form is, we try to make it very similar. It almost has verbatim, aside from the top sections of general information on the project. In the area where we're asking for the very specific information on details and features and materials and all that, it is exactly the same format that the Part 2. We're trying for this to be as compatible to the federal program as possible. So, but if you have the Part 2, you just have to upload the Part 2 and we will accept that as what is needed for this. Then with regards to the ground disturbance, I mentioned mentioned earlier, there's a check mark and it'll ask whether there's ground disturbance, yes or no. And if you say yes, then we will ask if you have an archaeologist under contract. And if you say no, you'll get a warning like what Michael showed early, saying that it's required. And then obviously if you say yes, there'll be information for you to fill in the blank. And then we will also be asking for you to submit a resume form. So with that, we do have a number of standardized forms. The purpose of this is that because this is a competitive program, and these are all scoreable items, we want to try to make it as equal one to the other. So we're reviewing this as much as possible, the same information between one project and the other. So with that, we have a number of forms. So aside from that form that has the detail information on the project that is similar to the part 2 under the federal, we have a form that is the approach to schedule. As I mentioned earlier, we asked for you to submit a bar schedule. What we will be looking here is that you have a good understanding what it's going to take to do this project. We are not going to be nitpicking necessarily the schedule, but we want to make sure that somebody is not coming in and saying, of course, I can do this project in 24 months. And when we look at it, it's really like a 4-year project. Because the understanding is that since we have a cap with every award that we give, theoretically on a year where we're oversubscribed, there could be another project that may not have gotten funds because somebody scored above them. So we want to make sure that we're as fair as possible, and we're reviewing the projects to make sure we're awarding to projects that are set up for success. So we ask for an approach to schedule. Here, any information that you have on any potential concerns or issues and how you would address them. Again, here what we're looking is that you have really thought through what the schedule is and what your approach and how you would deal with any unforeseens. For example, this is particularly important on projects that have ground disturbance, and you I would strongly recommend address any how you would address issues with regards to any previously unknown archaeological sites that may be discovered. Then we are also asking for approach to the CCE. Again, we ask for an actual CCE to be submitted, but we want you to tell us what have you looked at, what considerations that you take. Did you look into and take into consideration different costs of materials, reproduction materials, or materials that are potentially more costly, labor that may be more costly, some more specialized items that may be required for compliance. So all of that we would like to see on the CCE. And again, the thinking on this is similar with the schedule, although here we also don't want somebody to overinflate a CCE just so they have more potential money they can get, because then it affects whatever money is there for everybody else. So we have a realistic CCE. We want to clarify too that with regards to the CCE, and you'll be able to see this in the forms themselves, we will be for the CCE, we would be adding a contingency number of 18% of the to eligible costs. This is EDA contingency, but what it means is if during the project you have there's any modifications that require our approval, but if you have any modifications for unforeseen conditions that would increase costs, there is a potential for your number to go slightly up. But we have to present a number to our board, and the award can never be higher than that. And that's why then we are adding a contingency with the understanding that there may be significant unforeseens that could be discovered. Then we have resume forms, like I mentioned, so another standard form, and we will be asking for resumes to be provided for the architectural historian, historic architect, archaeologist, and other key team members, including project manager and the like. And then we have the key team member form that will include, we ask for them to identify, you have to identify specific key team members, and we ask that you provide the resume for each of those. And then finally, I don't know, oh, then I guess I skipped through that. The project cost summary, which is kind of the form that is right in the middle. And that is an important form that is not so much a scorable item as a form that breaks down what all the costs are. So what are the eligible, non-eligible, soft costs? What are the costs per phase? And this is a form that we will be using moving forward in the project. And this is what memorializes what are particularly for a phase project, what is the approved value or cost for each phase of the project. I know there's a bunch of questions, and maybe I can go through them here quickly. I don't know if make sure that if they're from the same section. So can you combine adjacent properties if they all qualify into one larger development under one application? So I guess technically yes. However, because of the language is on the statute, a property is a single property. So qualified or eligible costs apply to only one eligible property. So they will be whatever the main, and there's some exceptions for this. If you have a project where you have multiple buildings that you were combining into one project and have specific questions, I would recommend that you reach out to us. As a rule of thumb, only the big building, one building costs associated with one building qualify as eligible costs. There might be some exceptions when there's supporting structures from a main building. So, but if you have anything specific, please feel free to reach out to us. And then we have a question for continuously vacant question. Building is large, significant portion does not heat, another portion does have a split system, powered separately. We have used small space heaters. So this is specific to a project. So, and again, this is a question, Molly, that we can provide you a specific answer, because I think as a rule of thumb, we're looking at an entire building that is empty, but we can look at the specific concerns with regards to your project. Why are you asking for full construction level drawings when one of the requirements of the program is whether the project is feasible without the credit? If it's unclear whether the project can move forward, it's unlikely that the owner will want to finance full construction level documents. Design, develop, or later schematic level is more appropriate. So this is something that we struggle with. We ask for you to submit the most up-to-date drawings that you have, whatever they may be. They don't have to be released, although theoretically released drawings from our perspective are better. But again, this goes to, and we will look to see what we have. I guess if you have something, add design development, we can look at, but it's tricky because the expectation is that you will be ready to go. So we don't want, again, and that there's going to be no significant changes. So the concern is that if we approve a project, we're going to approve a project based on drawings and specifications that have been submitted to us, with the understanding that that's a project that's moving forward. Let's see. Would an expansion of the historic project be subject to the regs, or will the focus of the application be strictly limited to the historic component? So the expansion, and I'm assuming this means an addition. So we look at the entire project. However, just like in the federal, any expansion on a project, or I mean on the building's footprint or size, does not qualify as an eligible cost. However, it is part of the project. So we will be looking at everything for compliance and make sure that it meets the Secretary of the Interior standards, with the understanding, obviously, if it's a new addition, we just want it to be compatible with the existing building. But ground disturbance that occurs as part of an addition has to comply and has to take into account archaeology. Okay, I think that's, let me see. Oh, that's the question. I have a question with regards to the 3 types of taxpayers and very specific tax question. And that, to tell you the truth, I would have to look at the rules and the regs. And I don't have that in front of me, but please send us an email and we will definitely get you information on that. Okay, so with that, let's move forward to site control. Oops. Site control is pretty straightforward. Again, this is up to see how ready the project is. We have, this is a very low scoring section here, but we're looking about whether you have full control of the site, where you have control of a portion of the site, or if you don't have control of any of the site, then what kind of agreements that we have. In all aspects, we are looking at the applicant to have a path to site control. So you don't have to own the building or lease the building. And we understand that in the case of a project where you're not sure you need this money, you may not have bought a building yet or have a lease for the building yet. But what we ask is that you have some kind of an agreement with the current owner that sets a clear path for that ownership or lease or agreement, whatever it may be, as needed for site control. And then we ask that you upload whatever documentation you have. Obviously, if you already have a building, you can upload a couple of a copy of deed, or if you have a lease or whatever it may be, would you just upload the information to show your current status with regards to site control. Then we have the final scoreable criteria element is the positive impact on the surrounding neighborhood. And here we're asking about how is this project going to be contributing to the property, I mean, to the building and to the resource and to the community in general. So we're talking asking to provide a narrative showing whether the property is going to fill some kind of an unmet neighborhood or municipal or regional need. You know, there was no supermarket and now you're providing a supermarket. It's a community center that is providing services that are needed in the community. Whatever it may be, this is the place. We ask if the applicant has any community support, and you can upload written letters of support, whether it's from local community groups or neighborhood or the area. It could be from the municipality or anything in the area as applicable. And then finally, we are asking for you, again, another fillable area with kind of a narrative if you believe that this project is going to help, whether increase the small businesses in the neighborhood, or it's going to be able to attract employers or businesses or anything to the area. Again, because this is all viewed as a program that is supposed to help community development. So whether you think that this is an area that it was in really bad shape and this is a big building that once you bring this in, it's going to be something that is going to attract other building, or whether it's other businesses or people to the neighborhood that will then be able to become patrons in some of the other neighborhood businesses, this is where you would tell us about that. Okay, now let's see. Now I think this is back to you, Michael, right?
Yep, thanks, Aidita. So here we are going to talk about the proposed future uses of the project, and those can be commercial, residential, or both commercial and residential. We'll need to know if the project consists of any newly constructed residential units, and does the structure serve a residential rental purpose and also contain at least 4 dwelling units, which are a requirement of the program. For newly constructed residential units, 20% of the residential units need to be reserved for occupancy by low or moderate income households with affordability controls that are required by the Fair Housing Act. We will also need you to upload a narrative description of the project that includes breakdowns or, breakdown of uses and the related square footage. And we will also need to know the projected number of construction employees to be employed on the rehabilitation project. Next, please. All right, still on section or page 12, is continuing project elements. This is now tied into what Idita had mentioned earlier about no construction or rehabilitation activity having commenced at the site of rehabilitation project. This is where we will confirm that none has started or commenced. Now, if there was any construction or rehabilitation, was it ordered by a building code or other official with jurisdiction over the site to correct a health, safety, or other hazard? Those are the limited exceptions in circumstances in which work may have started. So if applicable, you'll need to provide a narrative evidencing that the proposed construction or rehabilitation activity was limited to just resolving that hazard. You will have to provide a supporting document evidencing the above order and rehabilitation is completed. That needs to include a copy of the official order, the documents that evidence the proposed construction or rehabilitation activity was limited to resolving that hazard, including photographs. And lastly, that the proposed construction or rehabilitation activity complies with the Secretary of the Interior standards for rehabilitation. And lastly, you'll have to provide documents evidencing the construction or rehabilitation activity that has commenced at the site. Next, please. Oh, the most fun part of the application process, the project economics. This is pretty straightforward in what we're asking for. I think it's relatively, it's lengthy, but it's easy to follow. So we'll need to start off with the funding source or sources, including the name, the type, the sources, the terms and conditions, and the amounts. And any documentation supporting the funding source will need to be uploaded here. If the applicant is requesting or receiving any development subsidies, they would be entered here. And similarly to the co-applicant section, it's laid out in the same way. You'd have to provide the name of the granting body, whether the subsidy is anticipated or committed, the date, and the amount of the development subsidy. Next, please. Continuing on, you will have to upload a market or feasibility study, a project pro forma, the adjusted basis of structure used for federal income tax purposes, that is the purchase price minus value of the land minus any depreciation already taken, plus any capital improvements as of the date of the application. And similarly, you'll have to provide the adjusted basis of structure used for federal income tax purposes. That is the purchase price minus value of the land minus any depreciation already taken plus any capital improvements as of the anticipated beginning of the selected rehabilitation period. So we're asking for the same thing, but with two different time periods. And then also a narrative of prior similar projects completed and related financial information for those projects. Next, please. Here you will need to provide financial information, including but not limited to 3 years business federal tax return or CPA prepared financial statements, 3 years personal federal and New Jersey tax returns. So the caveat is if the applicant is a recently formed single purpose entity that is unable to provide the requested 3 years of tax returns, it is imperative that they provide this information for any and all affiliates or entities with an ownership interest in the business entity to evidence the applicant's professional and financial wherewithal to successfully complete the rehabilitation project. In such a case, please attach a list of all the parties with ownership for any party for which such information has been previously provided within other sections of this application. So you will need to contact program staff, and the email is historictaxcredit@njeda.com. And that email must have underwriting in the subject line. It must include project name and address within the body of the message. And lastly, it must include a contact name, email, and phone number of the person within the applicant's entity that would be best qualified to discuss the issue with an NJEDA underwriting team member. Next, please. Continuing on, the applicant will also need to provide and upload a narrative of how any required equity contribution will be met. So supporting documentation of the source of equity must be provided and may include financial information of the applicant and owners. We'll also need to know if the tax credit is going to be monetized. So we'll ask for you to upload a narrative of the financing structure, and that needs to include a description of all the parties involved, the proposed timing of the tax credit, the sale, the transfer, the assignment or pledges, and the confirmation that the sale proceeds meet the required minimum sales price as set by legislation. Which I believe I did already went over with the 75 and 85%. And also any other documentation demonstrating economic and commercial viability pursuant to NJAC 1931-26-3A. Next, please. Now, IDETA had mentioned previously in the project concepts and team page, which was page 9 or section 9, that we would be asking for soft costs associated with the rehabilitation project. So here's where they would be listed. And specifically in this table, the type of soft costs that we allow are defined or titled as accounting, capitalized interest, consultants, fees, financing, fixtures and equipment, freight, loan origin and closing costs, other, real estate commissions, real estate taxes, or title and bond insurance. So that description shall specify the exact type of soft cost. So for example, if you're listing a consultant as a type of soft cost, you will need to specify in the description whether it's saying, if it's an architect or engineer, you do that there. The same can be said for other. If you list other as a type of soft cost, we will need to know what that is defined on by the description. And then of course the amount. It's very important. The amount listed here, the total, it must be equal to the previously submitted soft cost amount that you list in the project concepts and team page. If you don't, you'll get a flag like we showed you before, but just something to keep an eye on. Next, please. And lastly, on the economics, the applicant will also have to provide the financial information of the rehabilitation project. So that will include all phases, including but not limited to any state or local financial assistance for the project, proposed terms of financing, proposed reasonable and appropriate return on investment based on the business entity's equity, net margin, and cash on cash yield. This is also the area where you can upload any additional information that you may consider useful for us to complete the underwriting process. And it's also important to please note that the authority, which is us, we may request additional financial information to complete the underwriting process based on what you provide and what we still need. I think then this is going back over to IDETA.
Yes. Okay. So I also really quickly before I move to the next section, we have a question about can you confirm that the tax credit investor is never responsible for tax credit recapture, if any, but only the applicant or the co-applicant are? So whoever received the certificate from at the beginning, which will be the applicant, or if you have a co-applicant, is the co-applicant, is the person that will be responsible for any recapture. If you sold a credit, the person that you sold the credit is never responsible for that. Is the team or the people that we have the agreement with that are responsible for that recapture. Okay, so now I promise we are here at the end. And I'm gonna try to go quickly through a bunch of stuff. Think about this when you download an app on your phone and they give you 30 pages of things you have to acknowledge and accept, or you cannot use it. That's basically where we're at. So a lot of these things are things that we have already discussed in other sections, but that we ask for information or we ask for acknowledgement. So we ask, this is optional information, but We collect information with regards to diversity, equity, and inclusion. So there's going to be check marks and ask for information for self-identification, both on owners of the business, type of business, if you're a small business, SPE, that kind of stuff. And if you have then information with the certification of that. So that is pretty standard, I think, for most state work. So, and it's not required information. Then we also, again, still optional information. We ask that you, if you have information and would like to provide it, that provide us information on the, again, we're looking at diversity, equity, and inclusion, on diversity in the company's leadership, diversity in the company's board of directors, if there's one, and if you have any diversity initiatives or programs, that you provide us information with that, and any information basically that documents diversity initiatives within the project. We're interested in knowing, so you can either type it in or you can do uploads. And this is information that, while it's not required, is important for the state as we are moving towards, and if we want to later on be able to have set aside programs, or be able to basically have better data, so better understanding on makeup of projects and teams. Then we have the prevailing wage and affirmative action requirements. These are, again, requirements under the program. This is the stuff we already talked about. And this is going to be a form that is going to be listing these things that you acknowledge that you have to comply with prevailing wage and what the requirements for that are. The same thing with affirmative action, and it's going to say, the affirmative action rules for the state and all that. So you're just going to have to acknowledge having little check marks on this. Then there is this form, and here I have to, this is one of those places where the application, the way, if you're applying to under the current transformative round that is open, this form will be a required form. After this went out and the application went live, we realized that this form is a little premature to ask for this form, because this form is specifically asking you with regards to contracts that have been issued. So there's an expectation that you don't have a contractor or a subcontractor already in place. There is, if you were looking to apply under the current rule, on our questions section in our website, where we answer questions on their specific round, there is explanation and walks you through what to do with the form, because you will have to upload it, but there's some areas that you can put that is not applicable and put in. So on the regular round, we will not be requiring for this form to be submitted at application, but the form will be required later on. So we'll likely have an acknowledgement instead of the requirement for the form that this will be something required prior to the start of construction. And then it'll probably include a link to the form so you can see what the form looks like. But this is something, again, that is going to be a little different. Also want to highlight that the building covers prevailing wage, prevailing wage, affirmative action, and green building. This program does not include a green building construction requirement. So any mention on green building in the form would, those sections would be left blank. Then we have a legal questionnaire. Again, this is a requirement. It is going to be not an attachment, but something that you'll be filling in and checking boxes. And it's going to ask about any past proceeding or pending proceedings for the applicant, and anything, and all the entities or individuals that you have. So includes affiliates that you have identified before. So any proceedings pending or past that may have resulted or may result in disqualification or debarment based on the regulations for the state. We strongly encourage that if you have something, this is not somewhere you want to lie in about, because we will be reviewing these things and double checking. You definitely want to be upfront with anything here. And we ask that you fill out all this information, asking questions about all the information with regards to that. And again, this is all if you have anything that the applicant affiliates will also be required to answer, but you have to answer on behalf of that too. Then we have a requirement based on this PL 2022C3, which was signed by the governor in March of this year, that there's prohibited activities in Russia and Belarus. This is a little bit of a moving target. What was signed by the governor talked about there being a list that would be created of businesses that are conducting activities that are prohibited with Russia or Belarus. Right now, the current application has a form that needs to be filled out, or it's a section in the application that will need to be filled out that specifically addresses this. Moving forward, as we roll out the regular round, likely the documentation or the list that was going to be prepared by the state is likely already done. So the language in here will be tweaked. However, the requirement with regards to the prohibited activities with Russia and Belarus will still be in place. It's just that the information that we ask may be slightly different. It may just be certifying that you're not on that list. If for some reason you get to here and you realize that there's something that you're concerned about, your business has some kind of association or some kind of business activity with Russia or Belarus that you are concerned, we ask that you send us an email, again, to the same place that Michael mentioned before, historictaxcredit@njeda.com. And here the subject lines should be certification of non-involvement in prohibited activities in Russia or Belarus. It is really, really, really important that, and I cannot stress this enough, when you send these, we strongly ask and recommend that for your answer to come back quicker and for somebody to be able to reach out to you quicker, that you provide this on the subject line. This is a competitive program, so our staff will be limited in the communication we'll be having with applicants, and all the questions will be addressed publicly. If you put this in the subject line, we'll have assistance from somebody else that will be able to send these emails to the right party right away, rather than wait for somebody to answer the question. So please make sure that you provide this. This is in the application. So when you get there, the information with the email and what the subject line is, it is in the application. So it will be there. Okay, so then, so we have a section, now we have a section of acknowledgements and a search section for certifications. And these are, again, the things you have to say, and these are going to include things like that you don't have, there's nothing, any issues that you have open, and that with any other state agencies or authorities. But we also ask, and you have to acknowledge of some things that will happen as well. So for example, you have to acknowledge that that all the information that you provide with us can be double checked and we may verify. You have to letting you know that we may get additional information, such as, for example, credit checks to verify financial information. We may share the information that you provide with the New Jersey Department of Environmental Protection. We also want you to acknowledge that if once the project financing and all is said and done, if your financing gap is smaller than what was originally identified, or if there is no financing gap, your credit may be reduced or may be canceled if there's no financing gap at the end of the project. We also want you to acknowledge that at the end of the day, when you show all payments done and the final total project costs, that if your actual eligible costs are lower than what you were expecting, the your credit will be based on that actual number, not on the projected number from the application. And then finally, we also want you to know and acknowledge that the EDA, it is at our discretion, we can conduct site inspections throughout the course of construction to make sure everything is being done the way per what your application and when your agreement is. And we may also conduct required request to conduct site inspections to confirm compliance during the period of compliance, which is that period of 5 years after project goes into building goes into service. Then we have some certifications, and again here, then we're asking for specifically, we want you to certify that there's no outstanding financial obligations, that you haven't mentioned, that all the submitted information is true, accurate, and complete, that the credit is not for your financial personal gain, for a family member or for somebody in your household, that the applicant is not in default from any other program administered by the state, and that you understand that, and you certified that you make sure that all subcontractors will have a public works contractor registration, that have not been debarred by the Department of Labor, and they will have a tax clearance certificate from taxation. And then finally, that the applicant is not able to cease operations on the project without the express written authorization from previous written authorization from EDA. And then now we're really here at the end, we have two certifications. There's these two forms that are required. If you have a co-applicant, there'll be one for the co-applicant and one for the applicant. If you don't have a co-applicant, then it's just the one form. It has to be signed by the CEO of the organization or equivalent, and basically is just certifying that the main difference between the two forms, by the way, is there's two things. On the one for the applicant, there is a section that this form will be required on any modification. So you have to put in whether it's for application or for modification. And here we're asking on the applicant, we want to know that, well, first, that all the information is correct, that the CEO has, or the person certifying this, they have reviewed the application and that they understand what's in it. But the main difference here is going to be that the one on the applicant side also is asking for that you confirming that there's no, that this is all the money you can get and the financing gap exists. Then finally, when you finish through all that stuff, and then you feel like you didn't need a drink, then you get to the fee payment portion. And here you can pay by check or wire transfer. There's instructions and a place where to send if you're issuing a check. And it will tell you what your fee is. So your fee is going to be calculated based on all the information that you provided. The fee that you will be owed at this point is only the application fee. And you have to understand that the application we will not start reviewing your application until the application fee is received. So with that, we're going to go through program fees here really quick. There's a fee structure that there's 3 different types of categories for fees based on the project size and type. So the first will be projects that have a rehabilitation cost of 10 million or less. Then there's projects that have costs over 10 million. And then there's a third category that is for the transformative projects, which have their own fee structure, because obviously those can get a significantly higher tax credit. All the fees are the same in all the different, on the 3 different tiers. So I'm just going to quickly explain what they are on this one and then quickly show you what the other 2 are. The application fee is the only fee that is at risk fee. So this is the only one that you're paying, hoping you get tax credits, but you may lose if you don't get it. That is the only fee that is at risk. The approval fee, and obviously that is due at the time of the application. The approval fee is a fee that will be due right before we go to the board to recommend approval. And this is basically to make sure you have skin in the game. You have to submit this approval before we go to the board. This is also the only refundable fee. So if for some reason we ask you for your fee, you pay your fee, we go to the board and the board rejects and does not approve the award for your project, that $5,000 fee in this case would be returned to you. Then we have an agreement fee. The agreement fee is due right before the final agreement is signed and executed. This is also one fee in which, again, in all three different tiers, there is a discount for a project that may have received approval for the federal credit. So if you have already, like we talked before, if you have already approved part 2 from SHPO, you have approval from SHPO on the part 2 for your federal tax credit. At the time of application, and you provided that information at the application, when it's time for the agreement fee, the fee would be half. Because there's the understanding that what we at the very beginning, seems like it was yesterday, of this presentation, when we talked about that little how the project moves. After that time frame between the agreement and the award and the agreement, when we talked about that's when you submit your financial information, the finals, and there's a Secretary of the Interior standard full review. If you already have approval from SHPO on your part 2 for the federal, we're not going to go through that approval. We're not going to go through that process. We are going to take the approval and the review that SHPO conducted, and that will be an automatic approval. So we would not go, since we won't go through that process, then the fee will be reduced in half. Then the certification fee is the fee that you pay when you want your certificate to be issued. Then a transfer fee is the fee that you pay if you're going to sell your credit. You pay that fee to get a transfer certificate issued to you. Then we have 2 modification fees depending on the type of modification. If it's a simple, straightforward modification or something before the agreement, for example, then it's 1 fee. And then when we have a major change that would require us to go to the board of directors for approval because it's a significant change, then that would be a $5,000 fee. In the case where you have a fee, that is something that you should reach out to our office, and we would be able to guide you as to whether what you're looking at would be considered a small administrative change or be a major change. Okay, so then with that, it's the same exact fees, but these are the fees for projects that are over 10 million. So as you can see, they go up significantly. And then if it's a transformative project, then the fees are significantly higher. So this is one, obviously there's very few projects that will fit into this definition. But again, the difference is that while the other projects cap at a $4 or $8 million potential tax credit, a transformative project can go up to 50. Alrighty. And then finally, we have, with regards to fee, we have these 3 fees that you may not need, but they are there for ease of the process. So we have an extension 6-month extension prior to the agreement. This is again that window between when you get an award and when the contract the agreement is executed. If for some reason, whether a year was not enough for you to provide us all the documentation you needed, or it could also be that once you have all the information, now suddenly you're going to get an agreement signed in December, and you don't want your construction time clock to start in December because you need to dig in for foundations and you need to open up the building, and it's going to be significantly more expensive to do it at that time frame. You may choose to get a 6-month extension to be able to control whether it is because you need more time or to be able to control the start time on your rehabilitation period. Then we have a 6-month extension, which is post-project completion. So this is after the building goes into service, you have your substantial completion. That's when the clock, that 24 or 60-month clock stops. but then you have a 1 year to provide us a finals. If for some reason, perhaps maybe you have some warranty issues that you're dealing with a contractor or something that you are not able to close out your construction contracts and get final payments due, all completed, to be able to show us final costs within 12 months, you can get a 6 months extension for that. And then finally, there's an agreement transfer fee. And this is if for some reason the business entity or the applicant is unable to finish the project, or they don't want to finish the project, they want to sell or transfer the project to another entity. They would have to submit documentation to the EDA and get prior approval to that, but then there's a fee for the review of the application and all the paperwork that we would have to do to be able to transfer and obviously draft or modify the agreement for an entity that would take over. And now I'm going to pass it back to Mike. He will talk a little bit now and take us to the end, Michael.
Yes, we're finally at the end. Just bear with us for 2 more slides. So if you could just advance to the next one, Idita. The application rounds for 2022, currently we have 2 rounds on the calendar. The first, which we are currently in, which is for transformative projects, is March 24th through June 7th. For the regular or qualified projects, that will be June 15th through August 15th. So 2 things to note about this. This is all based on the assumption that we receive no feedback from public comments and everything goes as planned. And then also that next year, and I think I mentioned this earlier in the presentation, next year we will likely have 1 round, which we will announce beforehand, that will include both transformative and qualified projects within the same time frame. I think next slide is for questions. Yep. So Idita, if you could just advance to the next slide. So if anyone has any questions, if you could please type into the Q&A or chat. And if you feel more comfortable or need more time with formulating all your questions, our email is historictaxcredit@njeda.com. And you could submit any inquiries there. But you should also know, and Idita also had mentioned this earlier, that due to the competitive nature of the program, any questions sent during an open application window will be responded to and posted on the NJEDA website. And we will send out a notice once the responses are posted.
Okay, we have one question with regards to phases, whether the phases have a time limit for completion. And the answer to that is no. You tell us what the phases are. You don't have to complete a phase by any particular time, as long as the entire project is completed within the designated time. So if it's phases, it would be the 60 months. When would the window likely be open for the 2023 round? We are expecting probably will be early in the spring next year. This year we were limited to when we could start and open a window because we were waiting on the rules to be approved. But we're hoping that the window next year will be earlier. We are also right now planning to make the announcement on when the window will be open by the end of this year, once we know what it took to get the applications from this year done and all that. But the expectation again is that we will be posting when the window opens, with at least a few months ahead of when the window opens. So I know we dumped a ton of information and we answer a lot of questions. Let's see. Okay. Once the application window closes, how long does it take to determine if you received an award? So we are right now assuming it's going to be at least a 2 months time frame for all the reviews to occur. If there is less applications, we may be able to do that faster. But what will happen is if you are scored ranked to receive an award, you would get communication from us once we finish scoring all the applications ahead of our board. We are our current hope and plan is that awards for this year will be published. I mean, will be go potentially to the December board meeting. But you would hear about it before that, because we would have to confirm all the information with you, and there is that award fee that needs to be processed before we go to the board. So if anybody has any other questions, if not, we'll be here for a little bit longer. We know that we just dumped tons of information. Okay, let's see. There's two other questions. Is any work allowed to begin once the application has been submitted? No. So the program calls for no work can commence until the award, I mean, the agreement is executed. I know that this is not ideal. If you have some questions about specifically, you can reach out to us. If you want to discuss the specifics on your project. This is something that is on the statute, so we had absolutely no flexibility on making a change on that. So again, I know that we just kind of dumped tons of information there for everybody. If we'll be here for a little longer and for at least 12 o'clock. And if anybody has any questions, you need to digest the information, let us know. We will post all of this on our website for everybody if you need to look at it again. And if not, thank you everybody for, we know this is very long time to sit here and be given data. So we appreciate you joining us this morning.
Someone raised their hand. Gustav.
Okay, I don't, you see that? I don't, but I believe you. Okay, are they able to speak, Miley? They can't unmute themselves, right?
One of us has to unmute them. Give me 1 second.
Oh, I could allow him to talk, it says.
Yeah,
Oh,
I just did it.
you just have to unmute yourself, Gustav.
Yeah.
Right, I just did. I just wanted to thank you all. This is the most informative couple hours I've been through. So I'm sure everybody else joins me in saying thank you very much, and we look forward to doing work with the great EDA.
Well, thank you,
Great, well,
Gus.
thank you. Yeah, thank you very much.
Sure.
Hopefully I answer a lot of the questions you had the other day and some more.
Yep. Yes, indeed.
Great. Alrighty, Miley's. I think that's it. Thank you, anybody who's still there. And any questions, please reach out to us. Have a good day, everybody.
Thank you, everyone.
Goodbye.
Thank you.
Bye.